November 27th, 2023. Usually after, holidays like, Thanksgiving and whenever there's, half days or at least a couple half days like we get, I try to sit out for at least the opening couple of bars, which is usually a good idea anyways, regardless. But I try to especially make sure to sit out for the opening couple of bars because you don't really know if the price action is going to be influenced more by this or by this. So I kind of like to let the day form on its own. But notable that we had a magnet here that needed to be tested. Bears who sold this closed at a reasonable thing. They got trapped, so they need to be let out at break even. And I also thought that the high of this day was going to be important, of November 21st. And the reason for that, you can see we tried to test it a couple times. I think we got within one tick of it here. We tried to test it again and failed. We tried to get tested a couple more times, and that's where the double bottom happened. You could argue that the double bottom was because of Wednesday's low, and there's a double bottom here and a lot of support, and that's reasonable. But I think that this high is really important, and we kept getting so close to it, but we're just never able to test it. The reason I think it's really important is because it's this high, and it's a bad sell signal bar. And when you get a bad sell signal bar, you should test the high of that bar, and we do end up getting the bad sell signal bar, but we just haven't been able to get back to that high since. And I do think that we're going to get there, and we're probably going to find a pretty good bounce when we do. But I do think we're going to get there. I just want to see something. Okay. But I do think we're going to end up getting there maybe tomorrow. So a big bear bar on bar one, closing near its low. I was kind of surprised with how large bar one was. There's a 9-point bar, which is, considering how big the past couple of days have been. Every day has been really small recently, right? Today was a 14.5-point day, which I have not seen that in a couple of years, I think. So I thought that was really interesting. But it's a huge bar on bar one. And, sometimes you get these huge bars on bar one, and then the rest of the day goes really sideways. I've seen that happen occasionally, but like I said, it's been a while. Bad follow through on bar 2 and 3. So basically, if you sold below 1, you're disappointed in 2. A lot of those traders are exiting, causing 3. 4 is another inside bar, and so it's an II pattern. It's an II pattern, but I wouldn't look too much into it. I think that, this is more seen as a tight trading range open. So when you get 5 is a double bottom with 2. But again, tight trading range open. So I don't think that we're going to end up getting too much of an upside breakout here. And I don't think 5 is worth buying. You're buying the top of a tight trading range. And it's notable with tight trading ranges, you usually test back into them. I think you can argue that the tail on 6 was the test back into the middle of the tight trading range. So 6 is probably a more reasonable buy, but 1 is such a large bar. And if 1 is such a large bar, why are we getting, you want more proof from the bulls is kind of my point. You don't want to buy above a bar like 6 with 1 being so big and now these bars are so small. I think the size of 1 kind of discredits the buy above 5, and it makes it a lot harder to want to buy above 6. You get some follow through on 7, but there's a tail on top and there's problems with it. I think you need, better bull bars and more consistent bull bars if you want to take a swing buy. And, with what I just said, you would think that would be 8, but I think 8 is really parabolic. It's a really big bar, and you don't have consistent buying, right? The size of the bars are not consistent, and 8 is a huge bull bar. And it's really important that it doesn't get above the 1 high, which is the breakout point. So we're probably going to have to test up here because there was some bull who bought this high tick. You have to keep that in mind. If we went all the way up here, there was a bull who bought the very high tick. And what do you think? What are you thinking if you bought up here, this very high tick, and then it gets back to your entry price? You're probably pretty eager to get out around break even. And so that's exactly what's happening on 9. And this is just too parabolic. I think it's better to wait. I think when you see 8, bulls need 1 more bar to prove that we're clearly always in long. We're probably always in long, but in a trading range, which is what this probably is, right when the market flips to always in long is a lot of times when it reverses. Now, can you buy the close of 8? In theory, you probably can, but I don't think it's that great because you have to have a stop all the way down here and be willing to at least all the way down here. But honestly, if it gets back down here, you probably have to be buying more down here. So maybe you need to stop even further down. But the thing is, if you're buying the close of 8, you're probably going to get a second leg, which is true. But the problem with that is that a lot of times in trading ranges, the pullbacks are a lot deeper than you want them to be pretty frequently. And that's exactly what happens here. If you bought here, you didn't want to see this deep of a pullback. But if you are buying here, you have to realize that it's very possible we get a very deep pullback and you need to be willing to buy more. So 9, bad follow through for the bulls, and a lot of them just exit on the close of 9. and that's causing 10. But 9 went down, up, and then down again on 10. So it could be 2 legs down. And then we went up again on 11 and down again on 11 with kind of a poor close on 11. So we have tails on all these bars. It could be some sort of parabolic wedge on a lower time frame. And with how strong this was and how strong this was, it makes this is big up, big down on the open and probably leading to big confusion. I didn't even realize, but I have a few examples of that. Big up, big down on the open, big confusion. Big up, big down on the open. And, they're all pretty much, a lot of them lead to trading range days. So, yeah. But you can see we're essentially getting that again. And then 12 goes up, but a disappointing close. And after this, we're probably going to get a second leg for the Bears. I thought during 12, we were basically, we were starting the second leg for the Bulls up from 5 to 8. I thought as 12 was racing up, that was, this was going to be part of whatever the form of the second leg was. But I also thought that this was strong enough to get its own second leg. And then you get 13. So 13, a bull bar closing on its high. But with 12 having a big tail, it could be 1 pullback 2 for the Bulls. And so, not as good as it could be. Bad follow through on 14, which is expected. You can see Bulls who bought up here were so disappointed that they got out, with a couple ticks of a loss. Even they were willing to accept a small loss because, the follow through was so bad. 15, a bull bar, but a really weak close. Probably buyers below, probably sellers above. We're right on a flat moving average. So I think better in general to do nothing. And you can see buyers below 15, but they scalp. Get an inside bar on 17. And then a failed breakout above, here on 18. There's probably sellers above 17, but it doesn't look great. But I think it's 1 pullback, 2 pullback, and then 3 is the tail up on 18 and a reversal down. So I think it's a wedge and it's a lower high as well from this, but we're also making higher lows. So, it's really a triangle. And when you're getting, should have extended that out, but you get the point. This extends through there. When you're getting a triangle early in the day, especially bar 18 is a pretty common time for reversals. The window is like 17 to 20 or something like that. But I think 18 is a reasonable sell, but the tail on the bottom is concerning and the micro gap up was concerning. And you're also kind of in a tight trading range. I think it's reasonable to take the sell, hoping we break out to the downside of the 18 bar range. If we do break out to the downside of the 18 bar range, you're probably going to get better than 2 to 1. So it's a reasonable thing to do. And you get good follow through on 19. 19 isn't quite able to close on its low. If it was able to close on its low, I think it's a better sell, but it's still, I think, a solid sell below 19, hoping for a swing. But the thing is, you have to be quick to get out. That the 11 close, while not a great sell, it's in theory reasonable to sell the close of 11. So we're probably going to find some buyers on the close of 11 when we get back to it, because you have disappointed bears essentially. Probably if you sell below 19, your premise is pretty much invalid on 20. If you're selling below 19, you're hoping we're going to break out and start a big bear trend. And once you get 20, it's still true that you should get a second leg down. But that second leg could be brief, and it's a trading range, so the pullback could be deep. So I don't think it's all that great of an idea to be selling or to stay short above 20. I think it's better to just be flat above 20. You get bad follow through on 21 and an inside bull bar on 22. Is it okay to buy above 22? I think you probably can, but my big problem with it is 20 through 22 is a tight trading range. And if you're buying the top of a tight trading range, it's an overall bottom of the trading range, and this could be 2 legs down. So I think it's probably okay to buy above 22. But the problem is, like I mentioned earlier over here, we're probably going to have to test somewhere in the middle of this tight trading range. And generally, tight trading ranges form a lot of traps, like 23. You can see how any bear, selling below 23 is not a good idea. It's too likely that, you're selling the bottom of a trading range and you're selling in a tight trading range. So I don't think it's a great sell. And that's one of the reasons that we got this big bull bar on 24. But I think it's also kind of hard to hold long when you see 23. But if you're going to take a buy like 22, you're going to have to realize you probably are going to have to sit through something like 23. And additionally, so it's probably an okay swing buy, but you just have to pretty much be ready to sit through a pullback, because it's pretty inevitable that a pullback is coming. And additionally, the neckline of the double bottom is the 21 high. And so when 23 fails to break out above the neckline and get a strong close above the neckline, and it's a bear bar with a strong close, it's just really hard to hold long below 23, I think. But if you're going to buy above 22, you probably have to. 24 is a big outside up bar. Probably happened because any bear who exited below here started to realize they made a mistake and they're buying back their longs in a panic, and that's causing 24. Bad follow through for the bulls who bought above 24 on 25. And you can see 25 tries to test back into the middle of the tight trading range. And, you know, the market cycle is constantly happening. And I kind of thought of this as the spike, this as the pullback, and then we got the channel phase right here. And I think it was pretty hard to want to get long. This wasn't an overall great day for stop orders, obviously, but I think it's pretty hard to want to get long pretty much anywhere in here. You get bad follow through on 26 because the bulls who bought above 24 are disappointed in 25. So they're exiting around break even during 26. A lot of them scaled in lower. Probably buyers below 26, but probably only for a scalp. So some of those bulls bought below and they scalped out. 27 is an inside bull bar. You know, I don't like it. It's too likely it's some sort of second leg trap. You're higher up in the trading range. Can you take it for a swing? Probably, but you can see what ended up happening is, you know, the high here is 64.25. Were they able to get to 69.75? No, they weren't. So they were 2 ticks short of making a 5-point scalp. What was actually interesting about 18, I didn't mention, you know, if you sold 18, you were able to make exactly 5 points. The low is 45.62.5, so it needed to get to 45.67 flat, or sorry, 45.57 flat in order for you to make 5 points. And that's exactly what happened. So if you sold 18 or 19, you were hoping we were going to get a swing, but instead bears scalped out. And when traders are scalping out, that's a warning that we're probably still in a trading range. So that's why you end up getting the bad follow through and traders are exiting, because they were hoping for a swing, but traders ended up scalping because that's what happens in trading ranges. Follow through for the bulls on 29. But, you know, is this an exciting bull bar? Not really. It's consecutive bull closes, and that's, you know, that's good. But with how large a lot of the bars have been today, a really small pair of consecutive bull closes is pretty much the minimum, and we're towards the top of the trading range. A lot of bulls would take the buy because they're thinking we're going to break out of the 18 bar range, but it's a scalp. You can see they bought and they scalped out with a couple points, and it's a big failed breakout of the 18 bar range. The move up from 27 to the high of 30 is strong enough that we're probably going to get a second leg up. So, you know, I wouldn't be thinking that we're going to, you know, go straight down here. And that's one of the reasons we get bad follow through on 31. But it's 2 doji bars, right? So are you all that thrilled to be long right now after 2 doji bars? Not really. Do you want to be short? Not really. It's a tight trading range, or sorry, it's a tight bull channel. So you don't really want to be short, you know, but you don't really love the idea of being long either. Bad follow through on 34, and you know we're probably going to test the bad follow through on 32. You know, we're probably going to test the 31 high, which we do during 33. And I think, you know, 34, 35 is a trend line break of the tight channel. When you get it in, but the thing is, we go down, up, down. So we go down on 34, up on 34, and then down again on 35. So this could be a 2-legged correction down on 35. So it's not a good sell on 35 because it's possibly just a second leg trap. And this isn't, you know, the first reversal down is probably going to fail. So you probably need to wait for the second reversal down. And that's one of the reasons you get bad follow through on 36 is because bears aren't willing to sell what's probably a second leg trap. They're looking for this as to be a trend line break and hoping to get some sort of major trend reversal. Excuse me, sorry. 37, follow through, but not all that great. More likely, you know, we're just going to continue sideways. If you're a bear, you're looking for essentially some sort of, you know, major trend reversal. We ended up getting essentially a higher high major trend reversal. And you get follow through on 39, 38, not all that good. Big bull bar on 39, but it's probably not going to have follow through. It might just be a second leg trap. And that's exactly what it looks like. Bad follow through on 40. But are you going to really sell below 40? No, probably not. It's most likely just going to be sideways here. 41 a reversal up, but not all that good. You're not going to buy above it. Could be 3 pushes up. And then bad follow through on 42. 43 was a bear bar at some point. Bears were hoping to get the midday reversal around bar 43. But you can see it ended up just testing the bottom of the buy climax at 39, the most recent buy climax, and finding buyers there. But bad follow through again on 44. A reminder that we're still in a trading range. A bull bar on 45, there's a 90% chance we're breaking out of the 18 bar range, which is what 30 was doing, and an 82.5% chance we're breaking out of the 36 bar range, which is what 45 did. But it's really unlikely that we're going to get to a new low on the day at this point. But this is setting up for some sort of major trend reversal. If you look, once you get 46, you know that we're probably going to start going sideways down. And if you look, this trend line is steeper than this trend line, which is a subtle hint that the trend is getting weaker. You can look at it and just figure out that it's getting weaker, or it's not very strong with how, just poor the follow through is in general for the bear bulls. It's probably going to fail. But this second leg up, this could just be kind of a second leg trap on a higher time frame from this first leg up, and the trend line is not as steep. So it makes me think that, we're getting a big failed breakout at the new high. It makes me think we're probably not going much higher, if at all. And when you get a higher high major trend reversal, usually you have to get a lower high as well. And I'm going to get to that, but keep that in mind. 47 follow through for the bears, but it's pretty much minimum follow through. We're probably not going that much, lower without pulling back because this channel is tight. 48 is a high one, but it's not very good. It's a high one at the top of the trading range, so probably going to have bad follow through, which it kind of does on 49. If you bought above 48, you were hoping for a big bull bar. You were essentially hoping for a bar like 8 and to get swept into a bull trend, and then we're going to get a breakout above the channel, something like this. But when you don't get it on 49, a lot of the traders end up scalping out, and that causes 50. Can you sell below 50? I don't think it closes strong enough. This could have been your lower high, but I don't think it closes strong enough, and that's why you get bad follow through on 51 and 52. 53, if it closes below 51 and somewhere down here, then I think it's a reasonable sell, but it doesn't. And so, you're probably going to get bad follow through because you're selling the bottom of a tight trading range with all these doji bars. And then you get 54. And I think 54 is an important bar. It doesn't close all that strong, and it's a wedge pullback, right? 1, pullback, 2, pullback, 3. So it's a wedge pullback from a tight channel, and bulls want another leg up. But it's not a very strong close. So I think most likely what's going to happen is we're going to get some sort of lower high here. I don't know if it's going to be 3 bars later, 5 bars later. I don't know if it's going to be here or up here or whatever. But I was thinking when we saw 54 and it triggered that we were probably going to end up getting a lower high. And I was needing a lower high for the potential major trend reversal. So I thought that's what we were going to get, some sort of lower high here after the trend line break and the higher high major trend reversal. We needed a lower high. And so when you get the bad follow through, obviously 55, 56, and if you bought up here, those traders are starting to scalp out, and that's causing 56, 57. And essentially when you get the 2 straight bear closes, bulls give up, and you get 58. I think 58 is a pretty strong sell. For one, this whole thing might be the lower high that you need, and it's also a potential breakout below a wedge, right? So you have the wedge, and you're hoping for essentially a measured move down. My big problem with selling below 58 was that it did not close below 54. You wanted a breakout below the wedge, right? If you were selling down here, you were hoping we were going to get a strong breakout below the wedge. And I was hoping that 58 would have closed below 54, but it didn't. So then I still thought it was an okay sell, but that was my problem with it. And then you get bad follow through on 59 and 60, and those both aren't able to close below that low either. But then 61 does. Now it's not as strong as it could be since 59 and 60 we're not able to close below 54, and we can't get consecutive bear bars. So 61 is not as strong as it could be. And you can see it trades up above 61 and stops out any traders who have essentially a skunk stop right there. The real stop should be above 59, which is the proper stop placement because it's the last pullback. So you want your stop above the last pullback. And then you get a strong close on its low on 62. It's now consecutive bear bars, but it's not all that great. You want, what you really want out of consecutive bear bars is, there aren't even good examples really the past couple of days because of trading ranges, but you want, this bar and then another bar that looks exactly like it. This is a bit too climactic, but you want another bar that looks exactly like it. And you're not getting that here. You're getting a breakout below the channel, sure. And, the channel is getting steeper. It's more parabolic now, which, is somewhat good for the bears. I mean, you're hoping we're going to get a vacuum test down. That's exactly what we get on 63. But does 63 look like a sell to close kind of bar? Not really. When you're getting all the way down here, traders start to look up here and say, well, we had a couple dojis. The follow throughs, but just generally been bad for the bears. So when you're getting this big giant bar, do you think we're going to get a big measured move down? Probably not. I thought we might break out to a new low on the day and we might get towards this high. But, I still, as this was trading down somewhere in here, I still took off, 65, 70% of my position. I probably should have taken off more too. I probably should have taken off more like 90% or even just scalped out of the whole thing because, I took the sell below 58. I actually took the sell below 58 and I got bad follow through on 59.60. And so I flattened on basically like as 61 was opening, I flattened pretty much at break even. And then as 61 started to trade down, I was thinking I might have made a mistake. So I sold I sold, somewhere in here and put a stop up here and just kind of sat through and ended up exiting during 63. But the problem with, trading it literally as literal always in is that you're going to end up exiting above 66 if you do that. And you can't be doing that on a trading range day. So when you get vacuum tests like 63 on a trading range day, a lot of traders are just going to take the gift and flatten their position. And that's exactly what's happening, why 63 had a big tail. Follow through on 64, but not all that good. Some traders are still short, but I think that the vast majority of traders, are scalping out. And we get bad follow through on 65. Any trader who sold the close of 64, hoping for essentially another leg down, is disappointed in 65. And so on the tail on 66, they're getting out, and that's causing the big rally on 66. Always in has to exit above 66, so it's probably a reasonable swing buy, but you're probably going to get a pullback because this was strong enough for a second leg down. And you get a doji bar on 67, 68, and then you get 69. I think after two dojis, you probably do not want to sell below 69 again as an always in bear. You maybe can, but again, I think this is strong enough for a second leg up. And after two dojis, probably not the best sell. It's also, essentially right around 50% correction of the bull move. And then you get an outside up bar on 70. In general, I'll note when you run stops. So like if you sold 69, your stop is above 68. When you run stops, there's a 50% chance the breakout's going to fail. Example, when you sell 58, when you get below 54, probably a 50-50 shot the breakout fails. Can you buy 70? It's right on the moving average. Maybe, but I'd probably rather wait. You can buy the close of 71 if you want. It's getting late in the day though, and it's higher at a trading range. You get follow through on 72, 73, 74. And then traders end up exiting below 75 since it's probably a second leg trap. And you're high up in a trading range and it's late in the day. So I think a lot of traders are going to exit, and that's causing the big sell-off on 76. Big tail on 77, kind of reminds you you're still in a trading range, but you do end up getting follow through to the bottom of the buy climax. For always in, I thought, maybe an okay buy with 24, but really not all that great. I thought 58 was the best trade on the day. I thought 19 was probably okay as well. And, maybe 66. But I think, the best trades in the day was probably just 58 and maybe 18 or 19. I really do think 18 or 19 were fine. But there were definitely problems with them with the tails. The 5 strong bear bars leading into the end of the day, I think we're kind of, and I don't want to say do isn't the correct word, but I'm putting more bias towards bearish setups over the past couple of days because I think we're going to end up getting a bear swing, probably tomorrow. I'm not really sure when though. But if we end up getting some sort of gap up on the open, I think we're probably going to end up heading back down for this to get a second leg. So if we end up, trading up on the open, we're probably just going to be a vacuum test of the 74 close if we end up getting a rally. And I think it's going to end up with some sort of, reversal down, essentially. On the daily chart, like I said, really small day, unusually small day. And, in general, just a lot of doji bars up here. Clear the drawings up. And, basically bad follow up at the top of the trading range. And I think we're mostly going to end up being sideways here and forming some sort of move down to the moving average. Bulls don't really want to buy closes after all these doji bars. So I think we're going to end up getting a pullback towards the moving average and go sideways for probably half the amount of bars of this. Assuming once the move down starts, this is 20 bars, right? So I think we're going to go sideways for maybe 10 or 15 bars. And then, maybe try to get some sort of reversal up once the move down starts. It's getting towards the end of the month. So you want to pay attention to if bulls are able to get a strong closing on the high. But even if they are, there's 3 straight bear closes, which is not what you want if you're a bull. So, that's kind of disappointing. So I think that this is going to get a second leg. While this is getting a second leg right now, I think that we're also going to get a second leg from here. And I'd be interested to see if bulls end up selling out of their longs once we touch this price because, this was so disappointing. So I do think we're probably going to end up forming some sort of lower high here. And yeah, on the weekly chart, I think, like I said, this is a type R channel, but we're probably going to get a pullback. I've been saying that. So anything else I wanted to say? I think that's it for the day.